almost, I think. There we go. Now we're live. Welcome back to Your Average Investor, everybody. We've got our Friday morning live stream to talk about a few different things. First up on the schedule is Big Lots. This is just looking absolutely juicy. What were you just saying about you think there's some executive
Yeah,
manipulation going on here?
it's interesting because currently the management of Big Lots, these guys are suggesting time and time again that the company may be going bankrupt, either directly or through some of the activities of how they're doing cash spend. And so, a direct quote was our net losses and use of cash in operating activities from 2022 to 2023 and the first quarter of 2024, as well as our current cash and liquidity projections, raise substantial doubt about our ability to continue to grow. And this is a concern.
Hmm.
So, when you have management saying something like that, the sentiment, not only internally, but now out to your investors, it's not looking favorable. And from a personal standpoint, I think that given the stock slid about 22% after their bigger than expected loss about a week ago, that this could have been a nice opportunity to get in. I'm a little rocky on this. What's your thoughts?
Yeah, no, I'm right there with you. I'm curious, is there a date on when those remarks are from? So I was looking at this the other day. Check out this Open Insider. We've got nothing but buying from executives and directors. It's not super recent, but Bruce, CEO, this was a $250,000 buy back in May of 23. And then more recently, one of the directors with what was this? A $75,000 purchase. This was in December. So it's curious to me to hear those statements, but then also to see the only thing that's been happening has been insider buying.
Insider buying is not a bad thing, which would give the market and myself personally, if I was an investor, a little bit of faith in the ability of what the company could do.
Right.
Excuse me. And so, looking at it long term, I guess the nice thing is that there are three groups that put a nice price target of $2.50 on Big Lots. So looking at that, as these guys continue to try to navigate this economic landscape, um, there is a nice front for as to where the stock should be. And thinking from a
Hmm.
macro standpoint, COVID did wonderful things for Big Lots. As we move out of that, but we continue to remain in tough economic conditions with the price of almost everything going up. Big Lots might be a good play. I mean, I see a lot
Right.
of favorable attitude towards it.
Yeah. No, it's interesting I mean, just from a strict technical analysis. There's really nothing that you can do here. I mean, it's just a continuous downtrend that hasn't yet formed any type of bottom. So I mean, there were previous support and resistance levels that have all just been totally shattered until where we're sitting at now. What is that? $2.19 as a low, 2.25 now. But what is interesting is, like you said, I mean, the if you look at the finances of the company, yes, they're losing a lot of money, but their revenue is massive, and this is what's so interesting to me. So they've got revenue of $4.6 billion a year, and on that revenue, their market cap is only 70 million, just under 70 million, and that's of course because
Right.
they have a loss of nearly $500 million a year. But they figure out a way to cut some costs, and that loss can very quickly flip into a profit, and start looking at some really interesting growth for Big Lots.
Yeah, it should be nice. I mean, and taking a look at the company holistically and looking at all things in play here, they had a price reduction um, due to the first quarter of 2024. They had really disappointing earnings. The company had an adjusted negative earning per share of almost 4.5. Um, and looking at it from a whole standpoint, when you're looking at the comparable store sales, it was down almost 9.9% store across store. Their foot traffic was down as well.
Hmm.
But the good thing is they are, or they do seem to be taking the proper steps. So for instance, they're enhancing liquidity by adding an additional $200 million term loan
Yep.
facility. They're expanding vendor relationships. They have additional closeout deals that they're going through. I mean, every time I pass by Big Lots, there's always some new sale or deal going on. And you do see it from a micro standpoint. Every time I pass these things, they're busy.
Yeah.
That gives me great confidence in it. It's more of, is management doing what they should be doing?
Yeah, for sure. And what's interesting, the busyness. I was looking at it from uh, website traffic stands the other day. So check this out with Big Lots. Their web traffic is actually still quite high. It's down from its peak in 20. I think it's 2021 is when their web traffic peaked.
Oh,
Yeah,
great.
here 9 million visits a month. They're down to about 5 million visits a month, but still that's significantly higher than 2019 and prior. Um, and one of the things I'm really interested to get your take on, so management's focus, as according to their last presentation, is all on. Oh, where did he say? Is right here. Basically, transforming their business into like the go-to bargain store. So getting rid of a lot of their. Here it is, right here. Own the bargain category with 75% penetration by end of 2024 and 50% penetration in extreme bargains. So I mean, like that is like everything that they're pushing for right now has become the number one bargain store. And I thought that was an interesting play considering you have things like Dollar Tree, Dollar General, other bargain stores that may, I don't know how much customer loyalty there is among those types, but what do you think of this type of a move by the executives?
That's interesting. I think that there could be a play there, mainly due to the fact that there are all these bargain stores that are simply going belly up. For instance, 99-cent store seems to be closing the majority, if not all, locations.
Hmm.
So when the competition starts getting thinned out, I believe, I think it was California, um, 99-cent stores closing something significant. It was like all 400 of its stores,
Wow.
legitimately
Interesting.
just overnight. They're just gone.
Yeah.
And so when you see something like that, and then you start saying, okay, well, in this space, who is left? You start thinking 99-cent store, Big Lots, Walmart, Wally World, however, whatever part of the
Mm-hmm.
country you're in. There's not much left. So they may be positioned to capitalize on that. There is a large buyer audience that does it. You're going to be going heads up with the TJ Maxx brands, which bring in, Marshalls, TJ Maxx, Home Goods, those types of places, which can be a tough position to navigate since each one of those offer different items, whether it's furniture, whether it's clothing, whether kid toys. So it'll be an
Right.
interesting position to be in, given that the stock has come down quite significantly. From a technical standpoint, I'd be curious to see what you think the current support and resistance positions would be.
Yeah, I mean, as far as support goes, that's what we're looking to form right now. It's like so I pulled out this. This is basically their lifetime chart. And you can see they're in uncharted territory right now. Prior supports were right here around $13 per share. You can see back from the beginning, right? It bounced off of $13. That was the big COVID dip, and then more recently it started bouncing off of this $13 ish range. Oh, excuse me, I got to go further back. Okay, there we go. This $13 ish range before ultimately crashing through. So $13 in my mind is going to be the big current resistance. If it can sustain any type of rally, we're going to see big resistance at $13. Uh, it's difficult to say anything other than we've got just oops, wrong line here. A lot of negative technical analysis, right? So you can look at it in a sense of you've got this series here of let's try to hit as many of these points as we can, maybe something about like that or so, but just lower high, lower high, lower high, lower high, lower high, with a bunch of series of lower lows as well. So what I'm wanting to see is some sort of base be formed down here where the price just kind of oscillates. It looks like it's oscillating between 2.2 and maybe 2.5 right now. So if we can get the price to oscillate up and down between these two for a couple of weeks, my guess is we'll see some sort of relief rally similar to what happened here, and I think we'll easily pop back up to the $3.5-4 range. I don't think we
Yeah.
see anything higher unless it's news driven, right? So like if there's some sort of news that comes out where Big Lots is got some big new plan or something like that I could see a big move up. But again, like even this more short term trend line, lower highs, lower lows, and we did have this nice support that looked like it was forming between 4 and 3.5. That just totally broke down with the recent earnings. That's where I'm thinking we'll get a new support down here in the twos, and then rallies will move it back up into the fours, maybe up into the fives.
I'd be curious to see what your what it looks like from a short squeeze standpoint, because
Yeah.
looking at everything in the marketplace right now, given management sentiment, everything else, especially from their 10Q being released yesterday, June 13. I'd be curious to see if you think that there could be a play here from some investors to do a squeeze on this one.
Yeah, I definitely think there could be. Let's see if it's showing up on Market Watch's charts or not. It doesn't look like they've got it. But so Finviz, this is a hard one to tell because they don't update. I mean, short squeeze interest is only reported, I think, once every 2 weeks or once every 4 weeks to FINRA. The float is extremely low, though. You can see the float here is 28 million shares. That's hardly anything at all. So
Yeah.
if you get some sort of excitement behind Big Lots at any given point, I think the float short. I saw some of our commenters on the previous videos were saying that the short float had increased something like 10 or 15% since the last earnings, and I'm not sure where they were getting that data from, but maybe they can comment on this video and let us know. But let's just say it is at 30%, 35% now. Well, 35% on a 30 million or under 30 million float stock means you get any kind of excitement start building here. You get a Wall Street Bets community that starts getting involved. You get Michael Burry that buys back in or something like that. And
Right.
and you've just got a massive turnaround that happens. That I mean, I wouldn't be surprised to immediately see a pop to $5 per share. So you're up 100% there. Possibly squeeze a little bit higher. And I would guess that a lot of these current shorts are probably short either from the $4.50, $5 price, or short from maybe even around the $10 price. So a squeeze up above $5 starts putting all of these shorts into a position they need to cover. Squeeze above, maybe $12 or $13. Now you're having even more covering. So
Right.
so I see the potential there, but I think it needs a catalyst. And the catalyst could just literally be attention from Wall Street Bets. Like that could be the catalyst, but there needs to be something where people start noticing it. So I think the next earnings report will be a big catalyst, but potentially there's a catalyst before that if somehow, and it's going to be hard for it to get attention right now, everything going on with GameStop.
Yeah,
Uh,
of course.
but as that attention fades, people are going to look somewhere else, and Big Lots could be the next target.
And I would love to see it. Talking from a purely financial standpoint, it's not too great news. I mean, if you're looking at net sales, they've decreased by 10% to 1.1 billion. For the quarter that
Right.
ended May 4th. So that's a little bit rough relative to 2023. And then if you look at comparable sales, they declined by 9.9%. Gross margins, those improved by about 190 basis points to about 36.8%, 37%. But that's due to lower markdown rates. So that they were
Hmm.
they were adjusting the way in which they're doing stuff. And then ultimately, operating loss rate, it improved, but management has continued to talk and implement cost reduction. And we both know what that means. That means that they're going to start removing employees and
Yep.
shutting down stores.
Right.
No one likes that from, a just pure environmental standpoint. I hate when people lose jobs.
Yeah.
From a macro standpoint, that's terrible. Um, I really just think there's some major concern. I would say if you are looking for a play here, invest wisely and be
For sure.
cautious. The company continues to face significant financial challenges, and ultimately, there's going to be doubt whether or not they can continue at the loss rate that they're currently experiencing. And I would love to see these guys do something. Big Lots was a part of my childhood. We'd always go there, always looking for deals. I still love going there, but be smart with this one because from a purely financial standpoint, Big Lots is in a rough spot.
Yep. Yep. Totally agree with you there. Really difficult to see if you're looking at this just from the finances. You see, I mean, minus $4 a share, minus 30 cents per share. This latest one, minus $4.50 per share. Really tough to see the potential turnaround story here, and it's got to happen quick because they don't have a lot of cash on hand, and they're burning a lot of money. Now, the last thing I want to say here, because we talk a lot about doing the wheel and doing covered calls, is possibly using covered calls or cash secured puts as a way to get an entry to it. This is something that's kind of interesting to me, right? So this is 30 days out, so we've got 1 month out. These puts here going for $10 a pop on the bid. That's what you're gonna get filled at. Maybe if you get lucky, you get filled at like 12 in the spread between the two. So you get a 5% return if that doesn't get exercised. You put up $200 to secure the put, and a 5% return there if that doesn't exercise. Again, the sell off may not be done yet, right? So this, did we just hit a new low today as we were talking? Look at that. Yep. So we just hit a new low today. So could be seeing something where this continues to push down and even break the $2 range. At some point, though, it does look like an attractive enough buy just to throw some YOLO cash on and say, hey, you know what? Maybe they go bankrupt, but if they don't, that's a 3x, 4x, 5x return over the next couple of years if they can, if they can turn this around. Now, speaking of turnarounds, what are your thoughts on not necessarily the GameStop meme rally, but GameStop trying to turn around their business? What are your thoughts on their? I mean, they haven't really said much about their new business plan, have they?
They haven't, and it's been interesting because everybody seems to want to know what's going to be, the future. And
Right.
I think there is some level of concern that these guys will become a blockbuster. And from that era, Blockbuster was revolutionary. The problem was is they didn't keep up with the time. They
Yep.
refused to take on this whole new approach of the Netflix model of direct to consumer. And you see a lot of that in the PlayStation or Xbox, where everything is digital content, digital downloaded content. And so, from an official standpoint, they said, "Hey, we have a plan. Most importantly about this plan is we are going to continue to execute quarter over quarter to get money back into the shareholders."
Mm-hmm.
Unofficially, and you and I know this from just watching companies like this, what that seems to mean is we're going to cut costs. We'll post a profit. The stock, will go up. A lot of the executives or other people will sell the stock, or we're going to lose volume and lose trend, and then the company is just going to slowly continue to fail. And if you want a case study on this, and you can pull up the trend on this, look at BlackBerry. I mean,
What's that?
BlackBerry,
BBBY?
I think it's just BB, to be
Oh,
honest.
that's BB. That's right.
I think
BBBY is Bed Bath and
BBBY
Beyond.
was Bed Bath and Beyond. That's another one that went up. But BB, is trading anywhere between the $10 to $12 mark, I think, during COVID era. And they were launching, they had to revolutionize their entire platform, moving away from this old historical cell phone. Then I believe they had a gal that came in as the CEO, and what she wanted to do was to spoof up or spiff up the phone models to have these like super high end, gold plated BlackBerry phones that could act as this entire fashion statement of a phone.
Hmm.
That didn't do too well. So then they switched their entire model. Okay, well now we're going to become a security company. We're going to do phone security, cybersecurity. We're going to change our platform and what our model is to act as this security agent for all things internet. I don't think that's doing well either. I'd have to take a look at what the stock is doing overall, but that's another one of these meme stocks that ran up for a bit of time and just really doesn't have a sound business plan behind it. So it's tough to see the stock stay at that level.
Right. Right. Yeah, it is, and yeah. So you can see, you guys that are tuning into view, this is the meme stock rally on BlackBerry, and then since then just a big sell off. What's interesting to me, so like AMC had the same thing, right? Big meme stock rally, sell off. GameStop though, this is what's so funny to me about it is GameStop did have the sell off, obviously, but they didn't sell off to lower than prior to the rally. You can see here they bottomed out at about $10.50 per share, which they had a 4-for-1 stock split, so that would have been roughly equivalent to $40 per share. If you were trading back in the day, you would have been buying in at like $2 to $5 per share at the lows, and then this initial squeeze got it up to about $40 per share, then nearly 500 before selling off. So they managed to maintain their share price significantly better after the initial squeeze than a lot of these other companies did. And I'm curious if in my mind I try to game out different scenarios, right? Is the scenario really that I mean there's three prevailing stories out there. One is that GameStop is undergoing a transformation led by Ryan Cohen, and he talks a lot about the legacy model of GameStop, and he had an interesting interview where he talks about, he's like, when I came in, or when I saw GameStop, it was interesting because it was basically like just this neglected business that the current executives before him were just like letting it kind of ride on into the sunset and milking it as long as they could. And then he's like, no, I don't want to, I want to see this transform and turn into something better. And so that's the one story, is Ryan Cohen's actually transforming it, and because of that, there's more inherent value there. The second story is that the price is so high because a bunch of, quote, dumb money from that movie that they released a couple years ago, the Dumb Money movie, a bunch of, quote, dumb money apes will just keep on buying and never let the
Yep.
price go down.
Yep.
And then the third story is that and this is from the perspective of the Wall Street bets or the super stonk crowd, is that there is so much manipulated short interest in this that it's inevitable for this type of a squeeze. And from what I've been seeing is the latest predictions are always somewhere between $1,000 and $1,000,000 per share of the short
Incredible.
squeeze, right? So those are the three stories that go on in GameStop right now. One is just the pure business play, it's transformation. Two is it's dumb money holding the price up, and then three is that the price is continually being pushed up because of the hundreds of millions of illegal naked shorts in the market.
Yeah, it's interesting too because I think part of the plan there is this level of from a buyer standpoint, nostalgia, physically and
Mm-hmm.
tangibly owning a disc, having this piece of not necessarily history, but piece of game that they can hold on to. And so, even for example, one of the largest launches, I think it's Baldur's Gate 3, BG3 is
Mm-hmm.
the abbreviation. I was seeing that earlier on Reddit. They're refusing to buy the digital the community is refusing to buy the digital component of the game. They want physical, tangible discs for it. So there will always be some level of market, going back to the GameStop circling
Yeah.
up here before we close out, of people that want this physical copy of media. And I think there is something nice to that. I mean, we've seen a huge, and it's been not small by any means, a huge surge of records and albums making a comeback across the entire United States. You walk into any Barnes and Noble or Target or
Right.
any, even Walmart, they're now vinyls back on the shelves. I
Wow.
mean, there's just been this huge move of nostalgia or grassroots back to, hey, it's trendy, it's retro, it's what I
Mm-hmm.
want. And if you go, for instance, on eBay or any of these other community marketplaces and you type in Super Nintendo machines, I mean, they're going for hundreds of dollars. You could find some of these things that are in good condition for 999, $1,000
Wow.
for a
Fascinating.
Super Nintendo machine when I can go on my phone and download, some sort of application, whether it's RetroArch or something else like that. And as long as I own the content, everything we do is clearly legal. I could play it on my phone for
Right.
free.
Right.
Because I own the content. No one wants that. Everyone's moving back to these, really cool setups, these large screen televisions. I mean, there's entire communities on Reddit that take you back to the 90s, and
Yeah.
it's an interesting time we live in where a lot of the fundamentals behind companies like GameStop or some of these other ones that it's people holding on. And I think it's great to see. I'm just relatively concerned for, the average investor that's looking to get into some of this and if they're able to make profit, if it's a good short term, long term, or if it's something that they should really be in.
Yeah, no kidding. It is interesting to see the trend moving back. Actually, speaking of going back to the trend of physical discs, my wife and I were just talking about the other day how personally we think there's going to be a shift back eventually to people wanting to own physical DVDs again instead of because like Netflix and all the streaming services keep upping their prices and then their content changes. You can't find what you want, so you have to subscribe to all 5 different platforms, and so you're ending up paying 50, $60 a month when you could just go buy like on eBay right now, you can get new in box DVDs for like $2. It's
Right.
nuts for like anything for almost any movie that you want. So it's a bit of a pain to have the big physical collection that you got to figure out how to store and haul around. But I think there might be a resurgence of people that, like you said, with the GameStop and the Super Nintendos and all of that, where they want the physical copies, they want to own something in their hands.
I
And
could
then
easily see that. I think you both are spot on. I think
yeah,
about it. As you said, the prices continue to go up. If you have internet outage, you're not going to be watching a movie that
yep,
night.
yep,
There's something for the generation that are currently in their 30s and 40s that grew up on Friday night pizza night where the kids get to select a movie. They
mm-hmm,
want to bring that back for their children to relive that. So when they're coming home, hey, the kid gets to pick out what movie it is. You don't go on a Netflix and give them the controller. You physically say, go pick a movie out.
right,
The blockbuster kids.
right.
So that's a cool way to look at it. I'd be curious to see if we do see a trend continue in that direction.
Yeah. Now, last question for you on GameStop. I don't know if you're familiar with this level of I don't know if I'd call this conspiracy or speculation is the better word. A lot of people talking now about GameStop turning into the next Berkshire Hathaway, where they've got this $5 billion chest. So they just did 2 offerings. The first offering they raised $1 billion, the second one about 3 billion, and they were already sitting, I think, on $1 billion cash. So they've got like $4 or $5 billion cash that they're sitting on right now. And in their latest offering, they said that one of the purposes they'd be using the money for is for acquisitions. And so and so there's speculation surging now that GameStop is going to do similar to what Berkshire Hathaway did. They started as a textile company. Warren Buffett takes over and says, "Nope, I'm turning this into a holding company, and I'm going to start buying stuff and turning these businesses around." What do you think? Do you think Gameshire Hathaway, does that exist?
It very well could. I'd be very curious to see if something like that could be pulled off. They've been relatively sluggish in the acquisition department. I would love to have seen GameStop really start picking off targets, but they might be posing themselves or positioning themselves into a great area.
Yeah.
And just to take a look at it, if you go and look at the GameStop Corporation, if you Google it, they are listed as a holding company. So GameStop is a holding company that was created to facilitate the combination of GameStop Holdings Corp and Electronics Boutique Holdings Corp.
Hmm.
They refer to themselves as historical GameStop and EB of Electronics Boutique, respectively. So they kind of already have set the groundwork there. But what I think is the most interesting component of all of what you've just said, and why it could be realistic, not saying it would happen, but it could be, they have $4 billion in cash.
Right.
And everybody's doom gloom right now on this whole market crash. It's on the horizon. It's coming. It's coming. It very well may. And what does the best during these people that have a lot of cash on hand, companies that have a lot of cash, can go and literally pick off any company they want. They could buy and consolidate their entire area. If they have $4 billion in cash and stocks tank, they can take over anything they want. So,
right.
I mean, you very well may be onto something here. I know Ryan Cohen was steering GameStop towards the mentality, or at least thinking about steering it towards the mentality of how Berkshire Hathaway operated, where they were picking things off. And great point to your note that it was a textile company at first, and they said, you know what, that's not us.
Mm-hmm.
So
Yeah.
interesting to see what direction that goes. But I'm telling you, if I had $4 billion cash on hand where I could deploy and purchase off anything that I wanted, I might be waiting for the correct moment, and then I
for
would just
sure.
start picking off every piece of competition in the marketplace, consolidate the marketplace, and turn ourselves into a no-named monopoly.
Yeah. Oh yeah. I think there's a lot to be said with that. And if a crash does come, I mean, Buffett's sitting on something like just under 200 billion in cash. GameStop sitting here with 4 or 5 billion. I mean, like to give you guys context for how big that is, Unity Software right now, their market cap after this latest earnings and sell-off, their market cap's about $6 billion. And so it's approaching the point that GameStop could just say, we're just going to buy out Unity and take it private. Not there's a lot more to it than that. They couldn't actually just buy up all the shares and take it private like that. But the market cap is pretty close to what GameStop's at. So last thing, we were looking at Disney last night. What are your thoughts on Disney?
Disney's a tough one. I'd be curious, and it's one that I've watched for quite some time because it's been revolutionized as far as it was a physical, tangible location that people were going to. They had Mickey Mouse, Minnie Mouse, they had the cartoons, our entire childhood growing up on. They've now launched their own streaming service. They've consolidated the market as far as Marvel, what to watch, essentially. Marvel, Star Wars, everything of that nature. I'd be curious from a technical, we can jump into the fundamentals, but from a technical standpoint, what do you see on the charts? Because it's a tough one to track. They always have some level of news, whether it's good or bad, but as they say, all news is good news.
Yeah, no, it's interesting, and I agree that the fundamentals for Disney are almost always going to be phenomenal. Like, yeah, they might have a little miss or a little surprise here and there, but they've got a massive media empire. From the technical perspective, we got a few really interesting things. So, zooming out. There we go. Zooming out a little long term, you can see some really big support here at $80 per share. That was where this most recent sell-off finally bottomed. Coincidentally, matches right with the bottom of the COVID sell-off. And then you've got a couple of other supports here at $90, and then here just under $100. These are what I like to call psych levels, especially $100. Like $100 a share, that's just like a psychological level of like, it's at $100 again, or it's if it's acting as resistance, same thing. So we've got it coming right down to this support around $99, $98 a share. It's hovering right at $100 a share right now, and it's just broken below this volume weighted average anchored line right here. So it's anchored to this recent low. You can see that the price caught on it before moving up. and it looked like it was going to catch on it again. Just broke below. Not uncommon to see on these catches where sometimes it'll, just like right here, right, breaks below for a few days before finally moving back up. I think this is a good. There's a good shot that we see Disney rally here up to maybe the 110, go for a little bit of a gap fill right here, maybe all the way back up to the 120s. And if I were to play this, I'm not playing it right now, but if I were, I'd have a pretty tight stop loss on it. Like if I'd probably put my stop loss like 97.5 or something like that. And the only reason I'm not super confident right about it right now is, like you said, there's a lot of talk about a overall market sell-off. Right, here's the S&P 500, here's the SPY, hitting all-time highs almost every day, and if it doesn't, then within a few days it comes back up again, and it's looking like we're going to have some sort of pullback happen. And if a pullback happens in the broader market, likely Disney is going to be included in that pullback and move back down maybe into this $95 range. So that's where I'm holding off right now, but it does look interesting.
It's a great technical job on your part. I always love seeing that. There is always some level of psychology, around the $100 mark. I know a lot of the traders, when I've spoken with them on a one-on-one basis, they always set their losses or their purchase orders pennies above or below.
Yep.
Those $5 numbers, 75, 85, those hard zero numbers. They're looking at 79.26, and I say, what's the magic behind 26? They said because as it's moving through up or through down, you're going to trigger that. But
Right.
okay, interesting position. And I can touch 30-second high level on Disney from a fundamental
Yeah.
standpoint, what it's doing, how it's doing, and I think we can probably conclude unless we have some
Yeah.
other fun stuff to talk about. Fridays are always fun. It's a great day. We get to get into the week, what happened, where we're moving, what's going on. But Disney, despite them having significant decline in net income, that's primarily due to the restructuring that they've done at the company, as well as impairment charges that they've had to experience over the last 2 quarters. So Disney has significantly increased their direct-to-consumer subscription basis. If you go look at
Mm-hmm.
Disney Plus and what they're doing, it was down tremendously right after we came out of COVID. Typical. Netflix experienced the same thing, Hulu same thing, Peacock same thing. Now it's starting to come back up, and they continue to add new shows, new exclusive content to the Disney network, and such as these guys have then seen a huge increase of cash flow from operations. Due number one, operational efficiency. Number two, they've had a huge bolster in enhancing the direct-to-consumer platform, which is now aligning with the consumers, i.e., people like us, for the preference on digital and sustainable solutions. And then finally, they've stuck a ton of capex and capital into the ongoing investments in the theme parks.
Hmm.
So as we move into the summer months right now, and everybody's traveling or everyone's going over to Florida, California to go to these theme parks, they're capitalizing on that because they put the infrastructure in place, and that's not going to be captured on I believe it was early May. They had their quarterly report come out. You're not going to see any uptick in profits or earnings, and that's hence why there was a decline in net income
Yep.
as we move into travel season. So I'd be very curious to see the next earnings when that comes out. It's probably something we could talk about a little bit as it gets closer. But Disney might be a nice play. It might be nice to get in there. And on a final note, I think they had a strong dividend, but I'd have to take a look at it. Let's take a quick look. They're at about 0.75% dividend. Quarterly dividends about 20 cents per share.
Oh,
And
did they reinstate their dividend finally?
I think that they finally they were talking about reinstating due to the fact that they've concluded their quote battle over there in
Yeah.
Florida. Um, I mean, their last dividend date, the
Oh yeah.
declaration was February of 2024. So that
Yeah. Look
COVID
at that.
era, that 4-year pause, we are back in operation. So I will let you kind of end it on this. That there's a very nice feature and tool where you could actually project out and see how much you could be making off of, hey, I'm going to buy 100 shares of Disney. What's that going to do from a purely dividend standpoint or growth standpoint?
Yeah, that's a great point. So we just launched this tool for you guys. If you want to check it out, it's mydividendcalculator.com. If you're into dividends and you want to see what this looks like from a dividend history perspective, like let's just say I wanted to buy Microsoft, right? And I was curious how Microsoft's dividend would be increasing over time. Well, check this out. I hit in Microsoft as my ticker. I'm going to get the full dividend history here, quarter by quarter, as well as wrapped up year by year. Now, there's some of this data that we only have access to a few years historical, so you'll see a lot of NAs. But check this out. The annual dividend change for Microsoft is 12.84%. That means they're increasing their dividend by over 12, almost 13% every single year. So assuming they're going to do that in the future, I can come here and say, well, what if I buy $10,000 of Microsoft today, and I buy an additional $500 a month, every month for the next, we'll go 20 years, and I'm also reinvesting my dividends. What's that going to look like? Well, now I can see here what that looks like over time is, so here's estimated dividends paid, and of course this is just estimates based on their past growth. At the end of that 20-year period, I'll be making almost $3,000 a year in dividends on my Microsoft shares. And if you look at Microsoft, like Microsoft doesn't necessarily have a high dividend yield. It's 0.68%, pretty small yield. But when they increase that by 12%, 13% every year over the course of 20 years, your effective yield on shares that you buy today turns into multiple percents, 3, 4, 5, 6%, because of that compounding gain. So go ahead and use the tool. See if you guys like it. Give us some feedback on it. We'd love to know what your thoughts are. Thanks for tuning in today on the stream. Anything else you want to add?
I think that's it. I think we covered a lot, but one thing I would love for everybody to do, what do you want us to talk about next? I mean, we could sit here all day talking about what we love in the stock market and what we think position wise. Leave a comment below. Tell us what you want us to talk about. And we promise next week, if it's within reason, we will spend a good amount of time talking about your specific stock interest.
Yeah, that's a good call out. Put it in the comments. Let us know, and we'll create some charts. We'll do some technical fundamental analysis on any tickers you guys give us. Thanks for